90% of retail traders are blind to the two most critical levels on the chart, levels determined 24 hours in advance. This is the smart money roadmap, positioning institutions for predictable movements. These levels are simply yesterday's high, YH, and yesterday's low, YL. They are not arbitrary lines. They're psychological battlegrounds where all prior session momentum stalled. YH and YL represent the maximum pain and profit points of the previous day. When price returns, prior sellers look to reshort and prior buyers look to exit. This creates automatic volatility. Trading YH/YL alone is prone to stopouts. We must apply a structural filter, the volume-weighted average price, or VWAP, and its standard deviation bands. Our edge relies on confluence. When a static level, like yesterday's low, aligns precisely with a dynamic VWAP band, it creates an almost unbreakable wall of support or resistance. This filters 70% of fake signals. Smart money doesn't predict, they position. The central VWAP line tells us the market's bias. Price above VWAP suggests net long positioning. Price below implies net short positioning. Institutions use YH/YL as traps. Expect price to push slightly past the level to trigger retail stops before executing the true reversal. You must expect a hunt, not fight it. In consolidating markets, YH and YL are natural boundaries. Mark the levels, confirm VWAP confluence, and mechanically trade the bounce to the opposite level. When a level breaks, observe the force. Real breakouts are impulsive and aggressive, backed by institutional capital. Fake breakouts grind, hesitate, and show struggle just above the level. The highest probability entry is often the retest. After a real break, price returns, and the old resistance, YH, must become new support. Enter when the bounce confirms the structural shift. Do not place stops exactly at YH/YL. Give the liquidity hunt room to breathe. Also, the power of these lines fades significantly after the first few hours of the trading session. This framework shifts your focus from predicting direction to positioning yourself where structural support, psychological momentum, and institutional flow align. Trade the confluence, not the chaos.